Hello, everyone. My name is Claire Jones, and I help arts organizations and badass business builders grow their businesses without burning out. I do this by focusing on systematic building and systematic scaling and basically streamlining your operations and your processes and your strategies in a way that frees up your time to focus on what you want. So basically, how can we get you out of the driver's seat so that your business is not entirely reliant on you so that it can scale beyond your personal limitations as an imperfect human being? Because we only have so much time in the day and we only have so much energy by ourselves. So how can you actually make it so that you are not a bottleneck for your business and you can take a vacation every now and then? So this is the next video in a series where I go over the business tips, tools, and strategies that I use both in my own business as well as in my clients' businesses. And this time around, I am doing a business plan template review. So how to create a business plan, what's involved in a business plan, and what to expect as you go through the process, and why it's actually important. So the first video, I went over the first half of a business plan, which included the company description, the products and services, and the marketing plan. And this time for the second video, I'm going to go over the operational plan, the management and organizational plan, startup expenses and capitalization, financial plan, appendices, and finally the executive summary. So the executive summary is actually the first section in the business plan, but you don't want to create it until you have the rest of the plan figured out. So I'm going to start with the operational plan below, and then we'll go from there. So let's see. I'm going to scroll down to page 27. That's where I left off. Come on. This is something that I often help my clients go through. It's very important to set these kind of things up so that you really know what to expect and that you can plan accordingly. So section number 5 of your business plan is going to be your operational plan. This section explains the daily operation of your business, including its location, equipment, personnel, and processes. So number 1, you want to cover production. How are you going to produce your product or deliver your service, essentially? So describe your production methods, the equipment you'll use, and how much it will cost to produce or deliver what you want to sell. Very important. Number 2 is quality control. How will you maintain consistency of quality across your various products, across your various services? How are you going to make sure that you have a quality product or service for your customer? And describe the quality control procedures that you will use to make sure this happens. Number 3, location. Where is your business located? You briefly touched on this in the company overview in the first video above in the previous sections. And in this section, expand on that information with details such as the size of your location, the type of building, is it retail, industrial, commercial, or office? The zoning restrictions, accessibility for customers, employees, suppliers, or transportation if necessary, costs including rent, maintenance, utilities, insurance, or any build out or remodeling costs that you'll have to pay for. And then utilities. Do you have a high electric bill? Do you have a high water bill? Really take this into consideration here. Number 4, what is the legal environment? So what type of legal environment will your business operate in? How are you prepared to handle those legal requirements? So include details like any licenses or permits that are needed and whether you've attained them yet or not, any trademarks, copyrights, or patents that you have or on the process or for applying to, the insurance coverage your business requires and how much it costs, any environmental, health, or workplace regulations that affect your business, any special regulations affecting your industry in particular, and any bonding requirements if applicable. Number 5 is personnel. So what type of personnel will your business need? Explain what types of employees. Are there any licensing or educational requirements? How many employees will you need? Will you ever hire freelancers or independent contractors? And include their job descriptions. What is the pay structure like? Is it hourly, salaried, base plus commission, etc.? And how do you plan to find these qualified employees or contractors? and what type of training is needed, and how will you train these employees. So you can download a job analysis worksheet for this and use it to help answer the questions above. Number 6 is inventory. So if your business requires inventory, explain what kind of inventory you will need on hand. So raw materials, supplies, or finished products. What will be the average value of your inventory? So how much are you investing upfront? What type of rate of inventory type turnover do you expect? And how does this compare to industry averages? So inventory turnover is basically how fast you can sell your inventory and replace it with new inventory. And will you need more inventory than normal during certain seasons? So if a retailer, in the holiday season, you're going to need additional inventory for holiday shopping. What is your lead time for ordering inventory too? Is it going to take a long time to produce the products? Is it going to take a short time to produce the products? Really spell that out here. And then 7, suppliers. So list your key suppliers, including names, addresses, websites, type and amount of inventory furnished, their credit and delivery policies, history and reliability. Do you expect any supply shortages or short-term delivery problems? If so, how will you handle them? Do you have more than one supplier for critical items, like as a backup? Do you expect the cost of supplies to hold steady or to fluctuate? If the latter, how will you deal with changing costs? And what are your suppliers' payment terms? Are they net 15, net 30, net 60? That basically means the amount of days you have to pay your suppliers. 8, credit policies. So if you plan to sell to customers on credit, explain whether this is typical in your industry. Do customers expect it? What are your credit policies going to be? How much credit are you going to extend? What are the criteria for extending this credit? And how will you check new customers' credit worthiness? And what credit terms will you offer? Detail how much it will cost you to offer this credit and show that you've built these costs into your pricing structure. And how will you handle slow paying customers? So explain your policies, such as when you will follow up on late payments and when you will get an attorney or collections agency involved. So after reading the operational plan section, the reader should understand how your business will operate on a day-to-day basis. Section number 6 is going to be management and organization. So this section should give readers an understanding of the people behind your business, their roles and responsibilities, and their prior experience. So if you're using your business plan to get financing, know that investors and lenders carefully assess whether you have a qualified management team. So number 1, include biographies. These are the brief biographies of the owners and or key employees, so include their resumes in the appendix. This is not something you need to include directly here, but have the information available in case people want to see them. But here, summarize your experience and those of your key employees in a few paragraphs per person. Focus on the prior experience and skills that you have prepared your team to succeed in this business. If anyone has previous experience starting and growing a business, either similar to this one or another, explain this in detail. 2, gaps. Explain how you will fill in to any gaps in management and or experience. So for example, if you lack financial know-how, will you hire a CFO or retain an accountant? If you don't have any sales skills, will you hire an in-house sales manager or use outside sales reps? Really go into detail as to how you plan to fill these gaps. Number 3, advisors. So list any members of your professional/advisory support team. So this could be attorneys, accountants, a board of directors, an advisory board, an insurance agent, any consultants, a banker, or mentors and other advisors. If they have experience or specializations that will increase your chances of success, explain that here. So for example, if your mentor has experience launching and growing a similar business, that's going to be super useful. Number 4, your organization chart. So develop and include a chart that should include both roles that you've already filled and roles that you plan to fill in the future. After reading this section, the reader should feel confident that you have a qualified team leading your business to success. So you can use this chart on the next 2 pages to plan out that information. Put their bios. Remember, brief summary, only a few paragraphs per person. Any gaps in management or experience, any advisors, and then the organizational chart. So who's reporting to who is doing what responsibilities, so on and so forth. I did a previous video on this that will help fill in why this is actually important and how to really structure this out so that you have a good idea of tasks, responsibilities, workflows, so on and so forth. So instructions in section number 7 is going to be startup expenses and capitalization. In this section, detail the expenses involved in opening for business and how much capital you'll need. So do not include ongoing expenses after your business opens. These are listed in the financial plan section. Estimating startup expenses as accurately as possible helps you gather enough startup capital to start business. Number 1, startup expenses. You can download a startup expenses template to go over specific details, or you can use a basic cash flow spreadsheet if you don't want to get into the weeds with this. I've also done a video on this, and it's super helpful, and you'll be using a cash flow spreadsheet across the board in years to come in your business, and so getting familiar with it up front is going to behoove you down the road. So in working on this business plan, you should already have gathered most, if not all, of the information you need. In the body of this section, be sure to explain all of the assumptions behind the figures that you have come up with. So how did you come up with these expenses? If you've secured or expect to secure loans, explain the sources, the amounts, and the terms. If you've secured or expect to secure investors, explain how much each investor will contribute and what percentage of ownership each receives in return. So be sure to explain or include the extra capital that you need for unexpected expenses. So opening a business almost always ends up costing more than expected, and you need to be prepared. So list this figure in the startup expenses template under reserve for contingencies. So how much should you set aside for these contingencies? You can talk to other business owners in your industry to get a ballpark figure, or you can just do the rule of thumb, which is to set aside around 20 to 25% of your total startup costs for these contingencies. Number 2 is your opening day balance sheet. Again, you can do an opening day balance sheet to determine specific details, or you can use a cash flow spreadsheet if you don't want to get into the weeds. Use this to detail the expected state of your business finances on opening day. As with the startup expenses sheet, be sure to explain the assumptions behind these figures. Number 3, include a personal financial statement. So if you are using the business plan to seek financing, include your personal financial statements for each owner and each major stockholder. The personal financial statements should detail each person's assets and liabilities outside of the business and their personal net worth. Investors and/or lenders typically expect business owners to use their personal assets to finance a startup. And so they'll want to see how much capital you actually have available from your personal finances. And after reading this startup expenses and capitalization section, your reader should know how much money is needed to start the business and how well capitalized you are at the moment. Section number 8 is going to be your financial plan. Remember, this is ongoing expenses and ongoing income. So your financial plan is perhaps the most important element of your business plan because lenders and investors are going to review it in detail. Developing this plan helps you set financial goals for your startup and assess its financing needs. So please include the following. Number 1, your 12-month profit and loss projection. Also known as an income statement or P&L, the 12-month profit and loss projection is the centerpiece of a business plan. So you can download the spreadsheet and fill in your projected sales, costs of goods sold, and gross profit to determine specific details, or again, you can use a general cash flow spreadsheet. I've done a video on this and it's super helpful. Then list your expenses, net profit before taxes, estimated taxes, and net operating income here. Be sure to explain again the assumptions behind your numbers in your P&L. Keep detailed notes about how you came up with these figures. You may need this information to answer questions from your potential financing sources. Number 2 is optional. It's a 3-year profit and loss projection. So it's not essential to a business plan, but you may want to create one if you expect your business's finances to change substantially after the first year, or if investors or lenders require it. Again, you can use a 3-year profit and loss projection template, or just expand out the cash flow spreadsheet for beyond 12 months. Number 3 is your cash flow projection. So we've talked about the cash flow projection spreadsheet, and this is exactly where it's going to come into the most helpful and most handy. So the cash flow statement tracks how much cash your business has on hand at any given time. So once your business is up and running, you'll want to keep close tabs on this cash flow statement. For now, however, you're creating a projection. So think of the cash flow projection as a forecast for your business checking account. It details when you need to spend money on things such as inventory, rent, and payroll, and when you expect to receive payments from customers and clients. So for example, you may make a sale, have to buy inventory to fulfill the sale, and not collect payment from the customer for 30, 60, or 90 days. So the projection takes these factors into account, helping you budget for upcoming expenses so that your business doesn't run out of money before you are paid by your customer or client. So download the statement or use the cash flow spreadsheet to determine this. And again, optional is a 3-year cash flow statement. Again, not necessary, but you may want to include it. Number 5 is a projected balance sheet. And so this subtracts the company's liabilities from its assets to arrive at the owner's equity. So you already created an opening day balance sheet in section 1. So download a new one and create a projected balance sheet showing the estimated financial condition of your business at the end of its first year. The major difference between the two is that the projected balance sheet includes any owner's equity resulting from the business's first year in operation. Lenders and investors may want to see this projection. Number 6 is the break-even calculation. So the break-even analysis projects the sales volumes you need in order to cover your costs. In other words, when your business breaks even, when is it going to be? Download the break-even analysis template, and using your profit and loss projections, enter your expected fixed and variable costs. Adjust the categories to reflect your own business. You can even create a couple of different break-even analyses for different scenarios. So, for example, your payroll costs will vary depending on whether you hire full-time employees or use independent contractors. So you can create different break-even analyses to help you determine which one is the best option. And 7, use of capital. If you're using the business plan to seek financing from lenders and investors, provide a breakdown of how you will use that capital and what results you expect. So, for example, if you might use the money to buy new equipment and expect that to double your production capacity. So after reading the financial plan section, your reader should understand the assumptions behind your financial projections and be able to judge whether those projections are actually realistic. So section 9 here is going to be your appendices. So don't slow your readers down by cluttering your business plan with supporting documents such as contracts or licenses. Instead, put these documents in the appendices and refer to them in the body of the plan so that readers can find them if they need to. So these are some elements that you might include. Agreements such as leases, contracts, purchase orders, letters of intent, etc., intellectual property such as trademarks, licenses, or patents, resumes of owners or key employees, advertising and marketing materials, public relations or publicity materials, blueprints or plans, a list of equipment, market research studies, or a list of assets that could be used as potential collateral. You can also include any other materials that will give readers a fuller picture of your business or support the projections and assumptions you made in the plan. So you might want to include photos of your proposed location, illustrations or photos of the product you are patenting, or charts showing the projected growth of your market. So after reviewing the appendices, the reader should feel satisfied the assumptions throughout the plan are backed up by documentation and evidence. So section number 10 is going to be refining the plan. So this is basically reframing or reformatting the entire plan that it speaks to your particular audience that you're presenting the plan to. So what are your specific needs, audience, and industry, and how best is your reader going to interpret that? So reframe it through their lens so that they understand it best. So if you're raising capital from bankers, they want to know how you'll be able to repay the loan. So how can you change it to include how much money you're seeking, how you'll use the money, how will that make your business stronger, requested repayment terms, and any collateral that you have. If you're raising capital from investors, they're looking for dramatic growth and they expect to share in those rewards. So plan on explaining the investment amount you need short term, the amount you'll need in 2 to 5 years, how you'll use this money and how that will help your business grow, the estimated return on their investment, an exit strategy. Are you going to buy them back? Is it going to be a sale or is it going to be an IPO? Percentage of ownership that you are going to give the investors, any milestones or conditions that you will accept, financial reporting that you will provide to the investors, and how involved the investors will be on the board or in the management of the business. If you have a manufacturing business, explain the operations involved, what equipment is needed, what is the production capacity limits of the equipment, what are the production capacity limits of the proposed physical plant? Is specialized labor needed? What raw materials do you need for manufacturing? Are there any special requirements for storing those? What quality control procedures will you use? How will you manage inventory levels? What is your supply chain? And explain any new products that you're developing or products you plan to begin developing after you start up. If you have a service business, explain your prices and the methods you use to set them. What systems and processes will you use to ensure consistent delivery of your services? What quality control procedures will you use? How will you measure employee productivity? How will you subcontract any work to other businesses? If you are doing it, what percentage of work will be subcontracted? And are you going to make a profit on this subcontracting? Explain your credit, payment, and collections policies and procedures. Explain how you will maintain your client base and get long-term contracts. And explain any new services that you're developing or services that you plan to add after your startup. For a retail business, explain any specific brands you plan to carry that will give you a competitive advantage. How will you manage the inventory? Is there a software that you will use? What forms of payment will you accept? What payment processing service are you going to use? What point of sale software and hardware are you going to use? Explain your markup policies, and your prices should be profitable, competitive, and in line with your brand. Initial inventory levels, how much inventory do you need to start? And this is based on the average annual inventory turnover rate. Multiply your initial inventory investment by the average turnover rate, and the result should be at least equal to your projected first year's cost of goods sold. If not, you may need to budget more for your startup inventory. What are your customer service policies? How will you handle returns and exchanges? Will your retail store also have an e-commerce site, or is one planned for the future? For an e-commerce business, are you selling a physical product, a service, a digital product, or some combination of these? If you're selling physical products, how will you brand and package them? What will you sell on your own website or on online marketing marketplaces such as Amazon? What technology providers or platforms will you use to run your e-commerce site? So do you need web hosting services? Do you need design services? Do you need a shopping cart provider, a payment processing service, fulfillment and shipping services, email marketing services? Can the solutions you've chosen quickly scale up or down as needed? Where will you get your products? Will you manufacturing them in-house, buy them from manufacturers, or use drop shippers? And will you handle returns and exchanges? And what are your customer service policies? How will you provide customer service? And will you use any proprietary technology of your own? And if so, what advantage does that give you? For software or SaaS businesses, what is your pricing structure? Will you use a free trial, a freemium, or a paid business model? If you offer free services or a free trial option, how will you upsell customers to a payment model? What percentage of customers are expected to become paying customers? Have you tested your software? Are there any early adopters already using the product? How will you manage and encourage long-term contracts in order to create recurring revenues? How will you manage rapidly changing markets, technologies, and costs? How will you keep your company competitive? Will you use in-house developers or outsource this function? How will you provide customer support? How will you retain key personnel? Are you using any proprietary or exclusive software that will give you a competitive edge? How will you protect your intellectual property? And what additional products or updates to current products are you planning after launch? So now that you're almost finished, it's time to go back to complete the executive summary. Again, this is the last section you need to complete because you will already have the rest of the plan completed and you will be able to summarize better. So again, I covered this in the first video, but I'll do it again now since we're going over it. The executive summary is the most important part of your business plan, and often it's the only part that a prospective investor or lender reads before deciding whether or not to read the rest of the plan. So it should convey your enthusiasm for your business idea and get readers excited about it too. So this is, again, the last section because that way you'll have all of the other elements decided and you'll be prepared to summarize them. So it should briefly explain each of the below. 1, an overview of your business idea, which should be 1 or 2 sentences. 2, a description of your product and or service. What problems are you solving for your target customers? 3, your goals for the business. Where do you expect the business to be in 1 year, 3 years, or 5 years? 4, your proposed target market. So who are your ideal customers? 5, your competition and what differentiates your business from your competition. Who are you up against and what unique selling proposition will help you succeed? 6, your management team and their prior experience. So what do they bring to the table that will give your business a competitive edge? 7, financial outlook for the business. So if you're using a business plan for financing purposes, explain exactly how much money you want, how will you will use it, and how that it will make your business more profitable. So limit the summary to 1 to 2 pages in total because it's supposed to be a summary. After reading this section, readers should have a basic understanding of your business, should be excited about its potential, and should be interested enough to read further. So again, this is the last section. So that's pretty much it. At the end, you're going to reformat it so that it reads comprehensively and smoothly. So it's not just a series of lists and facts and figures. So just really have fun with it. Include pictures if you want, include fun details if you want it to be, if that's on brand with your business. If it's more serious, make it more serious. It's really going to be a reflection of your business, and it's really going to help you guide the way forward for the success of your business. So I hope that was helpful. Again, I help a lot of clients with this because a lot of it is Greek to a lot of people. And I basically help as a translator and a trusted resource for helping people guide their way through this. So let me know if you have any questions, comments, or concerns. I'm always happy to hear from you guys. And I really hope that was helpful. So let me know. Take care and have a good one. Bye.